It's Thursday, the 5th of August 2021, and welcome to Frontier Opening Bells. I am Faith Agbeti, and with me on the show this morning is Agnes Gital, the managing partner at GBS Africa. Thank you so much for coming on, Agnes. I also have Omono Konko. She's a natural gas analyst, and Joshua Debisi, senior analyst with Fetiva Capital Management. A very good morning to you all, and thank you so much for coming on. We'll quickly get on to look at the last trading figures in selected African stock exchanges. All the markets that we captured here on Frontier Opening Bells, apart from Africa exchanges, which finished on Wednesday with about 0.07% decline in profit. The BRVM stock exchange was up by 0.49%. Nigeria's bourse in Lagos was also up by 0.03%. The Johannesburg Stock Exchange ended trading with about 28 basis points profit. In East Africa, Nairobi Securities Exchanges pushed the market into the green zones as well as it pushed the market into the green zones with about 0.12%. This is a gain. And in Africa, still in Africa's region, the Eastern Africa region, we'll quickly look at some top stories over there. We'll chat to some of them. Going first with Dar es Salaam Stock Exchange, DSC launching an initiative codenamed Endelza for SMEs to access capital markets. This move implies that Tanzanian small and medium enterprises now have the means to access capital markets to assist the SMEs and make their businesses have sustainability. We also have here that Bernard Ngugi has resigned as managing director of Kenya Power PLC after serving at the helm for almost 2 years. Rosemary Odo, who was the general manager of commercial services and sales, has taken his place in an acting capacity. Brigham Holdings, an Nairobi-listed firm, has named Zimbabwean Tavaziva Madzinga as the managing director to replace the company's long-time managing director, Wariga, who retired in January this year after working for about 4 years, 40 years for that firm. Regional Investment, the firm Centum, is seeking to sell part of its shareholding in the Two Rivers Development Company, TRDC Limited, to retire a 4 billion Kenyan shilling short-term debt, which is approximately 37.03 million United States dollars, because the repayment is already taking a toll on its finances. Jean Michael N. Sung has also been appointed as the CEO designate for MCB Group Limited, the financial services holding company. We have all of that from East Africa, and I'm sure Agnes will want to speak on some of this.
Certainly, Faith. Thank you very much. Good morning to everyone. So the leading story on that DAS stock exchanges launching Endeleza for SMEs. I think this is an effort to promote SMEs. Already, the Securities Exchange has about 26 companies, and so they are trying to see how they can support SMEs and formalize most of them. There are already 8 companies who have been sort of pushed in this project to see how they can how they can be listed under the Dar es Salaam Stock Exchange. I think that's quite good. Kenya tried, and I think other countries have tried really to support SMEs growth. Obviously, these in return promote jobs and employment opportunities for many. I do hope that this succeeds. Already the 8 companies that are being pushed or being used as in this launch have already reported really good feedback from the market. And so the leading story from Kenya is the resignation of Bernard Ngugi, barely 2 years after he took over as the MD of Kenya Power. This has come as a push from the trade unions and shareholders due to the fact that the Kenya Power PLC has been in a loss, making losses under his reign. It's good to see Rosemary Odrol, a woman, an engineer, take over the reign. I do hope that this will be a success. A lot of people in Kenya are speculating that Bernard has been pushed, and his resignation, which was quite a shock to many, is being termed as political. We wait and see how this pans out. Another story, an organization that I'm very close to, Britam has appointed Tabaziba as the new MD, replacing my good friend Mr. Waregi, who's been at the helm for about 40 years. The insurance sector, obviously, as you know, due to the pandemic, has been bleeding, but Britain has done pretty well compared to others in the market under the reign of Mr. Waregi. I wish him well, although he still remains as one of the executives on the board of Britain. Centum to sell its shares on into Rivers Development Corporation. I think Centum has always been. I mean, they always invest in real estate, but then they end up selling them off. Obviously, remember Centum lost their chairman, Mr. Chris Karubi, I think 2 months ago. But the real estate sector has been struggling across the region, so this will be a positive move. So that's my feedback on the East Africans headlines, Faith.
All right, thank you so much, Agnes. Let's move quickly to West Africa, starting from Nigeria. And over here in Nigeria, the Debt Management Office has appointed 8 international and domestic transaction advisors in preparation for issuance of the 2.343 trillion naira, which is about 6.2 billion US dollars Eurobonds in the international capital markets (ICM) to partly finance its 5.2 trillion naira 2021 budget deficit. Also, the Central Bank of Nigeria (CBN) has released guidelines for establishment and the regulation of payment service holding companies in the country. It requires that companies that intend to offer both switching and processing and mobile money services should set up a payment service structure that will promote an efficient and credible payment system. Right now, I think Omono Okonkwo, a natural gas analyst, I'd like you to quickly talk about the latest news on NNPC's buying shares in Dangote Refinery, and also the news that the federal government of Nigeria, the Federal Executive Council, is approving $1.4 billion to repair refineries across the country.
For the refinery rehabilitation, a lot of Nigerians have expressed maybe disappointment over the fact that the government didn't come up with this decision sooner, because the tenure of the current administration is about to be over. By 2023, we'll have new general elections, right? So a lot of Nigerians are saying, why now? Why take this decision now? Why not take it? Why wasn't it taken in the first during the first term of this government, knowing fully well that successive governments have been unable to kind of rehabilitate these refineries? And I am also concerned about timelines. It's not just about sending out an announcement saying, okay, we have budgeted this amount of money to rehabilitate the refineries. I am concerned about timelines. When is this likely to happen? When are you going to make sure that you start the project? For how long will the project run, right? It gives Nigerians the kind of like the foundation they need to hold you accountable, right? So it's not just about making announcements, it's also about making sure that that timelines are attached to those announcements. And as for investments in Dangote Refinery, that news is something that a lot of Nigerians are, saying, well, we don't want this, but like it or not, the decision has been made, right? So I think we should focus now on number one, energy security, which is what the government said that is the reason for investing in Dangote Refinery. Energy security, what does this mean? It actually means availability of energy sources and affordability, right? So if 5 years from now, or 3 years from now, or 3 years from now, petroleum products are still very expensive for Nigerians, especially those living in remote areas, who are we going to hold accountable for this decision, right? And I'm also concerned about decarbonization. We all know that under COP21 agreement, Nigeria has nationally determined contributions to make to reduce the effects of climate change, right? So if we are saying rehabilitate refineries and invest in Dangote Refinery, what are the decarbonization plans, right? That is what I am concerned about, because, of course, we all know that refineries emit a lot of pollutants, right? So what are the plans to make sure that we are concerned about our environment, right? And we also know that the government is seeking plans to switch from oil-based economy to a gas-based economy, right? So when we put all this together, what are our decarbonization plans? This is very important. And I think we cannot, cry until we're blue in the face, right? The government has taken this decision. So we should hold the government accountable, number one, for timelines, and number two, decarbonization plans. Because if we're erecting more refineries, then we need to also take into consideration the afforestation plans. We also need to make sure that we are, putting pressure on the operators of these refineries to reduce the carbon they emit into the atmosphere. So I think those are the important things. It's not about crying on social media saying, oh, well, why did you take this decision? They've taken it. So we need to focus on other important things.
Thank you so much, Mono Konko. It's really nice talking to you there, natural gas analyst from Abuja, Nigeria. It's nice having you on the show. Okay, right now let's move on to Corn Oil's half-year results, which is out. It's showing that the company's profit after tax has climbed up 213.7% to 1.06 billion naira. MTN Ghana's half-year financial result is also out, and it's showing that it rallies 96% profit year to date. A Japanese firm, Keppel Africa Ventures, the most active venture capital company in the African tech space, in the year 2020, has backed 22 startups in the first 7 months of this year. The company is founded by Ryosuke Yamawaki and Takahiro Kazaki in December 2018. Keppel Africa Ventures has offices in Nigeria, Nairobi, in Lagos, Nigeria, in Nairobi, and it makes seed investment in early stage tech startups in African continent. Yeah, very interested there. I'm sure you want to say something on that, Joshua.
Well, so honestly, this Japanese venture capital firm is a little bit outside of my scope of the market, but I think definitely I can speak to the
Okay, so
DMO. I can speak to the DMO and the
okay.
Euro bond issuance. Obviously, this has been in the offing for quite some time. You know, when you add that to what the IMF is giving us with regards to a facility of almost 3.5 billion, that comes to about 9.7, almost $10 billion that the CBN is going to have access to by the end of this year. Now that will do a significant amount to boost the FX reserves. Obviously, the 3.25 more so, simply because it's a facility that is not really like a cash facility, but it will accrue directly into the CBN's FX reserve, allowing them to clear out some of the backlog with regards to the demand for dollar that has been, building up since 2020. And if they're able to clear out that backlog, that should also give some confidence to the investors and the international investors specifically who have been trying to exit the market for, close to a year now and have been unable to. So if there is way more FX liquidity and FX reserves are in a very healthy position, this I think will take them closer to the $45 billion mark. I believe that should also boost confidence in the international market with regards to investors coming back into the country, and also help to stabilize our exchange rates, which has improved since the CBN's implemented this sort of ban, not really a ban, but stopped selling dollars to the BDCs and empowered the banks to proceed to sell more dollars to customers. So overall, I think that this is very positive. Obviously, this money is supposed to then fund capital expenditure and capital projects within the country. But I think it's a little bit strange that the government is going about cutting very, very long-term money to pursue, a one-year budget when we're already more than halfway through the year. It's a little bit of a strange thing to be doing. You don't take long term money like this for such a short term thing. However, if we're able to create value from all of these projects in the long term, then perhaps it would pay itself back as time goes on. However, it still remains to be seen, just due to the fact that it takes us so long to complete any sort of capital projects. We have projects that have been in the offing for decades that have not been completed, even when we did have the money. So I'm not sure if this will make that better. However, it will at least sort out the country's perception with regards to FPIs and should improve our liquidity position.
And moving away from West Africa, let's quickly move on to South African markets, where Telkom, the market, the company over there in South Africa. It's a big company. The company's revenue went up 3.5% year on year to 10.62 billion rands, mainly driven by mobile business due to the growth in mobile broadband customers, which went up 30.9% to 10.5 million, while EBITDA margin went up 7.3%, pardon me, demonstrating recovery in top line revenue and strong profitability compared to what was recorded in 2020. South Africa's third biggest telecom company, that's Telkom, says that it has appointed the head of its consumer business, Serame Tokobang, to be the group Chief Executive Officer designate with effect 1st of October this year. Tokobang, who is also the Group Executive Committee member, replaces C4 Masako, who will step down at the end of June next year. Also, Naspers has invested 120 million rands in South African insurtech Naked Insurance. Existing investors, Yellowwoods and Hollards, are also participated in the funding round, which comes barely 2 weeks after Naspers, via its early stage tech investment vehicle, Naspers Foundry, invested in another South African insurtech platform in its $2.3 billion Series B round. Also, Liberty Holdings, the insurer and asset manager, which plans to delist and merge with its parent Standard Bank. It's budgeting for at least 1.2 billion rands in COVID-19 related life insurance claims over the next 6 to 9 months. Liberty is actually bracing up for a fourth wave of coronavirus infection. Is expecting that the impacts of the fourth wave will be much lower than what was recorded on the third wave over there in South Africa, especially now that vaccination programs are gaining momentum in the country. Zimbabwe Treasury is set to clear a backlog of foreign currency allocations owed from central bank run auctions in the next 45 days. The central bank had introduced weekly foreign currency auction last year to improve the access to dollars, but traders and some commercial banks in Zimbabwe that are currently taking up the 7 weeks for successful bidders to receive the allocations, which is disrupting companies' operations. And this is why we are seeing that the Zimbabwe Treasury is making a move to clear the backlog of foreign currency allocations. Okay, we'll move on quickly to North Africa. And over there, Fitch has raised its outlook for Egypt's banking sector to stable for the month of August from the negative outlook in July. That's coming from Fitch Ratings. Still in Egypt, the International Finance Corporation, IFC, which provides financing of private enterprises' investment in developing countries across the world through loans and direct investments, has pumped about $100 million in first private sector green bond. Trade exchange between Egypt and Nigeria has risen to $181 million in 2020, and the turnover of Morocco's petrol company SNAP has risen 38.6% in the second quarter of the year. TSE, that's the Tanzania Stock Exchange, coming from there, the Financial Markets Council has approved 2 management companies and 3 investment funds over there in Tanzania. All of that are coming from North Africa. Agnes, I don't know if you'd like to talk on that.
So it's interesting to see Fitch raising Egypt's banking sector to stable. I think Egypt throughout the pandemic has been performing fairly well compared to the rest of the countries in the region. When I say the region, Sub-Saharan Africa, North Africa doesn't seem to be heavily affected by the pandemic, which is good. IFC pumps $100 million to the first sector green bond. I think this is the way to go. Green bond and impact investment. I think there's a lot of interest in this as investors look for impact impact or sustainable project. It will be interesting to see what these funds go to. Um, and a story perhaps, Joshua or Mono, you'd like to comment on is the trade exchange between Egypt and Nigeria rising to $181 million. That's quite interesting. I'll be keen to hear what products and how this has been, particularly during the pandemic.
Yeah, actually, that is quite interesting, simply due to the fact that, like you said, it would be very interesting to know specifically what the products and what the nature of that exchange is. Although I think definitely, because as I've mentioned before, Egypt is sort of, a very much a gateway into the Middle Eastern market. I feel as if this figure should improve or, should continue to grow as the years go by, just because it gives, Nigeria access to a much broader market through the, Africa Free Trade, Continental Free Trade Agreement. So I'm not sure exactly what the details are of the nature of that trade relationship, but I would be very interested and I would love to, update at a later point on exactly what the nature of that relationship is. But it is definitely very encouraging. Hopefully we can get it into, the half a billion
Yeah,
to
yeah,
1
absolutely.
billion,
I had conversations
points
in
in
Nairobi
the next coming
around
years.
ACFTA and to understand, maybe it'll be interesting for us to understand whether this is as
Okay,
a
thank
result
you.
of the Africa Free Trade Agreement, as you mentioned, and to see exactly what products are participating in this trade. So, a good one, I think.
Thank you so much, Agnes and Joshua. It's really those are really insightful conversations over there. And with that conversation over there in North Africa, we'll come to the end of Frontier Open Bells this morning. Thank you so much for coming on, Joshua Adebisi, pardon me, Agnes Vital. Thank you so much for your words. Also, Omuno, thank you too for coming on the show this morning. And on that note, I'll say bye for now.